Hey everybody, welcome back to Finance Friday, where we are going to continue our discussion about taxes on this lovely Friday. And as always, please like this post, share it, and subscribe to my YouTube page, right? So before we get started, you're probably wondering why does she have a 3 balloon floating in the background? Well, that is because on tomorrow, Saturday, July 20th, I will be celebrating 3 years of my business, Ross Financial. And I just want to take the time to say thank you to everyone who has supported me and continue to support me. Thank you to everyone who refers me over to people that they know, tag me in different statuses for people to come my way. And I just really appreciate it. Business has been phenomenal over these last 3 years, and it has grown tremendously. So again, thank you. All right, so for today, Finance Friday, we are going to talk about the difference between standard deductions and itemized deductions. All right, so just FYI, again, if you see me kind of looking over, that's because I'm looking at my notes, because I just want to make sure that I get this information out to you all correctly. All right, so let's first start with, all right, what is a deduction? A deduction essentially reduces your tax liability. All right, so it takes your gross income that you made minus your deduction, and deductions can entail of many things, but again, we're going to focus on difference between standard and itemized today. And essentially, it'll take the gross minus that standard or itemized deduction amount, and it gives you a number, and they take that number and they calculate, okay, how much taxes should you have paid per year? So in other words, they lower your tax liability, right? So we like deductions. So what I get from a lot of clients is that them not quite understanding what is the difference between standard deductions and itemized deductions, right? So let's first start with standard deductions. Standard deduction is a fixed set amount that the government set based on your filing status. Right. So last week we talked a little bit about different filing statuses when we touched on the form W-4. So if you didn't watch that video, go back and watch it. Right. So let's talk about the different standard deductions depending on your filing status. Excuse me. So if you are single or married filing separately, your standard deduction for 2019 will be $12,200. Right. So they slightly increased from 2018. If you are head of household, your standard deduction will be $18,350, and if you are married filing jointly, it will be $24,400. Right? So again, it takes your gross income minus your standard deduction, and you get your adjusted gross income. Right? Your adjusted gross income. So I'm going to come back to that once I get into itemized deductions a little bit. So when it comes to itemized deductions, essentially, it's a list of things, and we're going to touch on those. And those amounts for each of the things I'm going to talk about, if you qualify for them and if they apply to you, when you add all of those up, they have to be greater than your standard deduction in order for you to itemize. Basically, the government is going to allow you to take the bigger deduction. You're not going to itemize if that entire calculation is less than your standard deduction based on your filing status. That is going to result in your tax liability being greater. So that doesn't make quite sense to do that. Therefore, you're going to go whichever one is going to give you the higher, whichever one is going to be the higher deduction, which essentially lowers your tax liability. So let's take me, for example. I am a single individual with no children. My standard deduction is $12,200. Therefore, my itemized deductions have to be greater than $12,200 in order for me to itemize, right? So let's talk a little bit about what are the different type of itemized deductions. I'm not going to go into a whole bunch of details. I just want to point out that some of these do have limitations. So make sure you do your homework and read up on them, right? So the first thing is medical and dental expenses. Now, I do want to touch on the limitation here because a lot of people may think that, oh, I can deduct all of my medical and dental expenses. That is not true. They have to be greater, for 2018, they have to be greater than 7.5% of your adjusted gross income. So, for example, let's say your adjusted gross income is $15,000. 7.5% of $15,000 is $1,125. which means that your medical and dental expenses have to be greater than that amount. And if it is, whatever that amount is, it will be included in your itemized deduction calculation, right? The next thing is state and local income taxes. So in the state of Wisconsin and in many states around the country, people are required to pay federal and state taxes. So on the federal side, they allow you to include your state income taxes as an itemized deduction. Right? The next thing is your real estate taxes for any properties that you own. Right? You can include that amount in your itemized deduction calculation. Next, we have home mortgage interest. So again, if you own property, the interest that you pay on the home is included, not your mortgage payment. Okay, your mortgage payment is paying down a liability. A liability and an expense are two different things. The interest that you pay is an expense, and the government allows you to include that as an itemized deduction, right? Again, I want to reiterate that there may be some limitations on some of these depending on your filing status and depending on how much money you made, but I just want to give the overall view of each of these. So again, do your homework. Next, we have gifts to charity. Right? So gifts to charity, again, depending on your filing status, you can do up to 50% of your adjusted gross income, right? So, and that includes monetary and non-monetary gifts to charity. So again, if I write $1,000 check, to a off to, some type of United Way or something like that, that will be included as in my itemized deduction calculation. Non-monetary, I want to stay on this one just for a few seconds because it is really important for people to understand that when you give away things to the Goodwill, start keeping track of what you give away to the Goodwill, because it may come out more than that $500 that many people just typically take. Like, oh yeah, I think I gave about roughly $500, because you don't have to explain what that $500 entails of. You can just say, I gave away $500 worth of things to the Goodwill. And if it's more than that, then on your itemized deductions, on your tax return, they want to know some more detail. That is really good to do that because that's a higher amount of money. That's a higher dollar amount, that can be included in your itemized deduction calculation. So I've had several clients who have actually kept track of the things they gave away to the Goodwill. And what they do is they go on the internet, and I believe there's like some type of form of on eBay. I will have to get the exact link for you if anybody wants it. On eBay, essentially, where you can figure out, okay, how much are the things worth that I gave away. So if I have 10 shirts, okay, let's say these are 10 designer shirts. They'll say, okay, those shirts are worth, $10 each, right? If I have some pants or shoes or whatever, they'll give you a typical dollar amount depending on the condition of them. And then you add that up, and that can be included in your itemized deductions for your non-monetary gifts to charity, right? So don't just pack those things up and just drop them off at the Goodwill. Actually take time and sort through them, figure out what it is you have, count those shirts up, count those different items up, and then you will be able to possibly take a higher deduction than $500, right? So again, that would be included in your itemized deduction calculation. Last but not least, we have casualty or theft losses. So it's essentially if your house burned down, if you have some type of huge loss, some type of theft loss, somebody break in. Again, things like that as well are going to be subject to some limitations and rules. So make sure you check up on those things if you have some type of casualty or theft loss any given year. Right. Notice I didn't say anything about work travel or work uniforms or income tax amount, because the amount of money that you pay to get your income taxes done, because those things are no longer included. Okay, as of 2018, when the tax laws changed, they took some of those things away from itemized deductions. So it's really limited to that list that I just gave for your itemized deductions. Now there are other deductions outside of itemized deductions, but again, that's a topic for another day. We're just going to focus on what itemized deductions are. So again, for myself, if my itemized deduction calculation comes out to greater than $12,200, which is my standard deduction. So if my itemized deductions come out to $13,000, then I will itemize rather than take the standard deduction. Okay, so it's really important to understand that yes, you may qualify for you may have those different itemized deductions, but if they do not come out greater in total than your standard deduction, then you would just be taking the standard deduction. And that's okay. It's not a bad thing. The good thing is you're taking the bigger of the two. So they're not going to make you take the less of the two. And again, it's wise that you take the greater of the two numbers, right? And then, but you still, obviously, throughout the year, you want to keep track of those different items that I listed out that are included in the itemized deductions, just in case you are able to itemize, right? So I know this one was a little bit more lengthier than usual, but it's definitely worth it to make sure that you understand the difference between the two, so that you don't think, oh, hey, your tax preparer doesn't know what they're talking about, or you're a little up in arms like, well, I thought you could take those different things as deduction. It's just a matter of really educating yourself, making sure that you understand that there is a difference between standard deductions and itemized deductions, and many of the things that we think that are automatic that we can get a deduction for are not. There are rules and limitations to these things. Again, as I stated earlier, there are different deductions. Obviously, there are credits as well that people can qualify for, and that is, a whole nother topic that we won't get into today. But I just want to make sure that you all understand what the difference between standard and itemized deductions are. And again, make sure you research those different itemized deductions to understand the limitations and how they may or may not apply to you, right? So, like this post, share this post, subscribe to my YouTube page, and don't forget, it is Payday Friday, so pay yourself first. And I thank you all so much for tuning in to every week to Finance Friday, and look for more to come.